Over the past 6 months, the US dollar has experienced a notable decline, losing approximately 9% of its value. This downturn is primarily attributed to a combination of aggressive trade policies, escalating geopolitical tensions, and diminishing investor confidence in US economic stability. Key factors contributing to the dollar's decline: aggressive trade policies and tariffs. President Donald Trump's administration has implemented extensive tariffs, including a recent 100% tariff on foreign films. Such measures have disrupted global trade relations and heightened fears of a trade war, leading to reduced demand for US assets and a weaker dollar. Erosion of investor confidence. The unpredictability of US economic policies, particularly concerning trade and fiscal management, has led investors to reassess their positions. Concerns over potential inflation due to tariffs and the overall direction of US economic policy have prompted a shift away from dollar-denominated assets. Global movement towards de-dollarization. In response to the U.S. use of the dollar as a tool for economic sanctions and its dominant position in global finance, several countries are exploring alternatives to reduce their reliance on the US dollar. This trend, known as de-dollarization, has contributed to the dollar's weakening position in international markets. Capital outflows to other currencies. Investors are increasingly turning to other currencies perceived as more stable, such as the Swiss franc and the euro. This shift is driven by concerns over the U.S. fiscal policies and the desire to mitigate risks associated with dollar-denominated investments. Anticipation of inflationary pressures. Economists warn that the imposition of tariffs could lead to higher consumer prices, fueling inflation. Anticipated inflation erodes the purchasing power of the dollar, making it less attractive to investors and contributing to its decline. Outlook. While the US dollar remains a central figure in global finance, the convergence of aggressive trade policies, investor apprehension, and a global shift towards currency diversification poses significant challenges. The long-term implications will largely depend on future US economic policies and the global community's response to current financial dynamics.